All right, everybody, welcome. Happy holidays. And we definitely welcome to our Wealth Accelerator Academy call. And I know for some of you guys, this is also your monthly call as clients as well. So we got a good mixture of people here and excited to definitely have you on. One thing I want to definitely say, of course, beyond happy holidays, is just, thank you again for being a part of this ride over the last, 2021. I almost call it 2022. I'm already looking into the next year, I guess, but it's been good times. We got the Fed's coming out saying that they're going to start raising interest rates by the end of the year next year. Like shock, no big surprise, right? So definitely things are going to be. It's going to be interesting to see what happens over the coming year, and definitely really excited that you guys are tuning in, that you guys are a part of this, because honestly, with things changing in the world the way they are, with decisions and every sneeze that Congress makes, it affects you, right? So really just be able to keep your ears close to the ground, knowing what's going on. It's definitely a really important thing here. This one's just kicking off for our Wealth Accelerator Academy. This is our first official monthly call. Next month, for those in the Wealth Accelerator program, we'll let you know about the actual date. It's going to be on a Wednesday. It'll either be the 12th or 19th. I got to figure out because I might be flying on one of those days. So I'll keep you posted and let you know. For the rest of you, again, welcome. And here, this is going to be more of a Q&A call. So what I want you to think about right now as we're getting this kicked off is, what are kind of the burning questions in your mind right now, especially as we're hitting to the end of 2021, we're now moving into 2022. What are those burning questions that you have? What are the things you have for me? And, it could be just about, different types of investments in general. It could be just about things going on in your own financial life or decisions you're trying to make. The one thing obviously is we're not going to be talking about with these Wealth Accelerator calls. We're not going to be talking about specific deal providers, right? Like we don't really offer that as part of this. That's more for the one-on-one coaching. But definitely if there's a question in general about real estate or different types of real estate, or if it's about oil, or if it's about franchises, or about any kind of investing for that matter, or hey, what do I do with the IRA and what can I invest in? And those kind of questions, right? Or hey, I'm looking at these debts. What debts do we pay off? Those sort of questions are great. Those are perfect. So I don't know, Howard, you even sent me a list of questions beforehand too. And, most of the questions we can address, some of them we can't, because obviously we're not talking about specific deal operators and providers on this call, but definitely we do talk about a lot of these other topics as well. So at this point, I'll open up for questions. Just what's burning on all of your minds right now? And if you're afraid you'll forget it, you can always type in the chat too to say, hey, here's a question I have. Or if you want to try to keep it anonymous.
So I'll ask a general question that maybe you can address. I've been speaking about this a lot with quite a few clients, and that is in regards to assets that have a good inflation hedge. Obviously, inflation's been in the news quite a bit. A lot of people are thinking about larger allocations to physical gold and silver. I know you have some experience with that. I know real estate's a great inflation hedge, being able to lock in a 30-year fixed rate mortgage. But just kind of wanted to get your thoughts on inflation kind of related assets, and then how much of someone's portfolio do you think should be allocated to those types of assets?
Yeah, that's a good question. Well, first off, inflation friendly assets, right? Obviously, like we talked about, you just mentioned gold and silver, there's real estate. Some people might even look at crypto as potentially being that, although that's debatable and depends on the type of crypto and on all that sort of thing, right? Obviously, I think the safest one you're going to go for, if you're looking for investment returns, that's definitely going to be more real estate based. If you're looking more like, hey, I want to be able to protect the savings I have. So maybe you have a bunch of money sitting on the sidelines like we do, where we have money sitting around as emergency reserves, right? Where the money is not going to be invested. It's not going to be deployed in real estate. It's going to be sitting around. Obviously, they're saying the inflation rate right now is about, 7-8% for the last year.
That's wild.
Right? But we know it's more than that. If you ever want to see the real inflation rate, go check out shadowstats.com. As in shadow, like your cast a shadow, and then stats.com. They actually show the inflation rate the way it used to be calculated when it was just a pure calculation. Since the Carter administration and every administration since, right? They've basically tried to manipulate and jack with the whole inflation, with the numbers that we get reported with the producer price index, the consumer price index, all those things. They've messed with that so much that you're roughly at least 6 or 7%. Whatever they report is usually about 6 or 7% higher. And because the truth is, I mean, if you think about how they might have said, hey, 2% has been our target, 2% would imply that your cost of living doubles every 26 years, or sorry, not 26, 36 years, using that rule 72, right? So that means we went back, that means we'd be going back to 1985, saying that it was exactly back then, your standard of living was half of what it is today. And we know that's complete bull, right? Like we know things are a lot more expensive than double since 1985. So that's the thing that, you have to really be aware of, is that even when they report these numbers, it's probably worse than what it is, definitely worse than whatever they report. That being said, if you got cash sitting around, one place I diversify my cash, you mentioned gold and silver. I do that. I generally, as a rule of thumb, it's different. If you're trying to get out of the rat race, you're not quite hitting your cash flow number yet. It's going to be a smaller percentage than once you hit that number and you're not worrying about cash flow as much, right? So, for example, if someone's trying to get out of the rat race, I might say out of that 6 months of reserves, maybe a couple of weeks you might keep in gold and silver. So like, for example, if your emergency reserves you're trying to keep the 6 months is $50,000, we probably would want to keep maybe like no more than about $3,000 to $5,000. That would be in gold and silver, right? Definitely, I don't think it's a bad idea. And if you look at the prices right now, the prices of gold and silver actually gone down, just like Bitcoin's gone down, right? Gold and silver has actually gone down in price the last several weeks, which is kind of a cool thing. So that's a good one. Now, once you get past your freedom number, right? Once you get past to being financially independent, you might put a bigger portion into things like gold and silver and things to hedge against inflation, because you're more focused on growth rather than just cash flow. But for most of everybody here, I would say don't put a ton into gold and silver. If you already have a ton of gold and silver, it's not bad to have that, but just remember, if that's preventing you from hitting your cash flow goal, trying to get out of the rat race, hit all those passive income numbers, then you might consider liquidating some as well. But again, prices have been down, it's cheap. And even this week, I've been looking at possibly buying more. So I do that. Like I mentioned, my life insurance is another way to hedge inflation, because it tends to rise or fall as inflation numbers, well, really not inflation numbers, but interest rates rise and fall. So I tend to do that as well. May not keep up completely, but a heck of a lot better than putting in my savings account. That's for sure. So I keep the bulk of my money in the life insurance, some money in the local bank, but not a lot. And then I keep a small portion in gold and silver. I would also say, as an inflation hedge that many people don't mention, I would also bring up food. Definitely, if you've seen anything, food prices have gone up a lot. Definitely store food. Have a food storage as well, because that is one thing that is a commodity. It's something that actually has intrinsic value. It actually has monetary value. Now, it doesn't mean you're just going to go and liquidate it and sell it to people. Although if we have another 2020 type of situation like we had with toilet paper last year, who knows? Maybe you can start selling it for a good profit. But I'm more looking at this as, I think there's going to be a lot of crap hitting the fan pretty soon. I think there's going to be a lot of stuff. I think the Feds just today, where they said they're going to double the tapering, meaning they're going to back things off so they can eventually raise interest rates. I think they're more scared than they're leading to believe. And so they know that it's already out of control. They've been pumping too much money in the economy. And eventually what's going to happen is the pendulum going to swing the other way. Once they restrict money, that's when you usually see markets drop, like stock markets and those sort of things. You start to see economies fail too, where they start to say, hey, no more money. And then when money flow blocks, it stops. That's also when people stop getting paid, and then people stop spending money. And then it creates this vicious cycle where it can create a depression as a result of that. So it'll be interesting to see what happens. But again, I think inflation wise, I just look for buying real assets, right? Just anything that's real, tangible. I stay away from the things that are more zeros and ones, that are more arbitrary based on values that a computer gives me.
I like it. Joe, I think you may have had a comment from earlier.
How are you buying gold? Are you actually buying the physical, buying it physically, or are you holding, where are you storing it? You have like a little place in your basement that you're like digging a hole, or what do you do with it? Or if we don't want to do that, can we buy it through, through a broker, through like Schwab and stuff like that? Or do you not recommend that? Suggestions on, I don't have any precious metals in my portfolio, and there's some things that maybe in the new year I'm gonna, just want to liquidate, take some gains on, and maybe I'll just shift a little bit. If gold, precious metals are down, I'll put a few dollars. I'll put a.
Yeah. Yeah. It's so, oh, sorry. I guess you're still talking. I can't hear you. Oh, now it's muted. Well, I'll start answering the question, at least from what you said. I won't tell you where I keep it because, I don't want you guys breaking into my house, but I do buy the physical stuff, Joe. I go to jmbullion.com, if anybody wants to write that down. And you can use other places. If you guys have a better source, great. That's the one that we tend to find a better spread, because you tend to buy it above the actual price at the time, right? So say silver's at $21 an ounce, you're usually going to be paying at least $23 an ounce. So you're usually in the hole a little bit when you buy it, but if it does appreciate, you get your money back eventually. But jmbullion.com, I buy coins, bars, especially if and I look at silver too. We've got a pretty good split between them. I would say this: if you're trying to pick between what percentage of gold versus silver, I tend to lean more towards the silver side, which is hard to do sometimes, especially if you have a lot of cash to use, because silver right now is around, $21, $22 an ounce currently as of today. So, you more like you're going to be buying bars of it. Now if you start getting a lot, I mean, you can use a safe, you can obviously use safe in your home, things like that. But if you start getting a big chunk of it, you get a large amount of it, that's where I'd probably recommend looking to utilize certain services. Like, there are banks that you can store things in, or there's other services that specifically will store gold and silver for you. Personally, though, I like to keep it on the site, just in case, because I want to make sure it's pretty close to me in case I need to use it. Thinking not just from a standpoint of hedging my inflation on my money, but also just utility. If all of a sudden dollars crash, we may want to be exchanging gold and silver. So that's why I have various amounts of it too. We have you can buy 1/10 of an ounce, coins, for example. So you can actually buy a silver that's worth like $2, that you could exchange and use like money. There's gold that you can buy in 1/10 of ounces as well, or in grams. It depends on how you want to buy it. Gold right now is right around, I think still around 1700-ish per ounce right now. So anyways, but I tend to lean more towards silver on the dollar amount wise, but we still buy, gold as well, because, gold is still that good staple.
I got one for you, Chris.
Yeah.
So as you and I have been working anyway, you kind of are aware of this anyway, but I'm taking a lot of money out of my 401k I'm kind of liquidating my 401k. I want to put it in an alternative investment space, right? So that's what we've been working on for a while. But this is the year that I retired. So I have a lot of, the company paid out a lot of money for my vacation and sick leave and all those things. So my earnings for this year are a lot bigger than they normally are, because I'm not taking any money out for a 401k or anything, like no deferments, right?
Yeah.
So how do I take money out gracefully out of a 401k without like just getting killed in taxes, jumping into the higher tax brackets, and being able to move them into real estate and other investments? I mean, is there strategies that I just don't know about because I scratch my head as I look at this and just go, so you have to live on it. So you got to take some money out to live on, right? Mm-hmm. So that's X thousands of dollars in that year. So then it's like, well, where do you want your tax percentage to be? That's how much you take out of your 401k. And then you do it year per year per year. Mm-hmm. And it just takes you forever to get out of your 401k.
Yeah.
So is there a strategy that's better than that? I mean, I can't, I'm not seeing it, but if you've got some wisdom.
Yeah, there's a few things you can do, right? And yeah, you're right. I mean, this is kind of like a review from what we talked about a month or so ago. I mean, The easiest one when you're coming from an employee standpoint, if you're a business owner, sometimes you can write off a lot of things in your business and show losses, and that helps. But is, you know, going into retirement or being an employee, you don't get all those tax benefits, right? So the only way to get a type of tax benefit like that is either one, you have a business, and that business could be a real estate professional, right? So real estate professional is one way, especially if you're buying real estate, depreciate a lot that goes above and beyond what you're earning in the real estate, and that offsets your other ordinary income, the things that you're getting, right? Now, if you don't want to be a real estate professional or you can't qualify yet, there's a few other options. One is there's oil, right? Specifically working interest oil deals. So I know some of you guys like on our, you know, our one-on-one clients here, like we had a guy on last month where we talked about that. And just a few weeks ago, they even had a working interest deal that they would let you write off 80% of whatever you invested. So if you took that money, say it was like 200,000 from your 401k that was coming out, which counts as ordinary income, and it's going to anyways, right? We just want to minimize that tax burden. That 200,000 comes out, you can put it into working interest, and what it'll do, they'll write off at that point 160,000 of that 200,000, or 80%. So really, it looks like you only pulled out $40,000 that year. Now, just know on the back end, you're definitely going to have, you know, some taxes as well, especially when earnings start paying out. But they do give you a little tax reduction, you know, like a 15% tax reduction on the back end too. So that's one way to kind of do it, especially depending on how it pays out. If it pays on a regular basis, could spread out the income and the tax you're paying on it while still getting invested. The other way is a method called conservation easements. Now, conservation easements are, here's the warning, they're targeted by the IRS, right? So if you do a conservation easement, which is, put it in the simplest, truest form, you're essentially buying land or buying some sort of property and then donating it to a government or a charitable organization, right? And for doing so, they'll let you write off at least 4 times whatever you donated. Now, occasionally I'll have somebody that has the right amount of land, but it's pretty rare because you have to have a good chunk of it if you're going to do a property or land. But to qualify, I mean, usually what you do is you pull your money together with other people, you purchase that property, and then say you did $100,000 that you did. Understand that $100,000 is not an investment. It does not come back to you, right? But if that 100,000 then allows you to write off $400,000 off your tax return, and that saves you money compared to what you would be paying off of that 400,000 you just pulled out of that 401k, right? Especially if you're in the 30% or higher tax bracket, or really about 32% tax bracket or higher, it makes more sense. So if you pull out a lot of money, that's one way to do it. More likely your income would have to be well over 400, 500,000 after you pull out the money from your 401k. That being said, again, it is something that's targeted. The IRS will question it. It doesn't mean they'll audit you, but they will at least look at the deal and make sure it's, you know, all the T's and that were crossed and the I's were dotted. There's another method called fee simple, very much the same thing, but just less check marks to check off the list for the IRS. It's a little bit easier to pass through. So I do have a contact for you guys, you know, if you want to get connected with them. But again, it's something where you have to push your income well above 300,000-400,000 a year for it to be worthwhile. Otherwise, it's not worth it. So that's another way. I know, Joe, you've had experience with that at least 1 year, if not 2 tax years. I think you've done that, right? Yeah. You know, you're still muted for some reason, but anyways, oh, there you go.
Our mutual friend is actually not writing anything this year.
Yeah, he's done for the year, right?
No, he's not done for the year. He hasn't done anything this year.
Yeah, he's waiting.
He's waiting because of the government regs and things of that nature. He said things are a little bit too uncertain from his perspective. So yeah, he's sitting tight. So I actually had a conversation with him last week just to make certain at the end of the year. So unless there's somebody else, you just need to be careful because, as you said, you know, not the individual taxpayer, but the overall deal.
Mhm.
And then depending upon the overall deal, it will trickle down to you if it's not done, as you said, with the, I's and the T's being appropriately managed. So,
That's right. Yeah, I saw that email come from him. It sounds like he's basically waiting for the tax laws to come, right? The new tax laws.
I forwarded that to you, correct?
Oh, was it you that forwarded it to me?
I didn't know if he sent that out to all of his clients or if I thought I did forward that to you, I think.
Yeah, it might have been from you. I got it then. Yeah.
Yeah.
But yeah, so that's the thing with tax laws. You don't know what's going to happen. If they do get worse, then that could be a better strategy. It could end up being a better deal. But yeah, with just like what Joe said there, it's pretty, everything up in the air. He's just saying, hey, I'm not going to do any more deals. And by the way, by this time of year, usually he doesn't do any deals. If you haven't done it by November, you're pretty much not going to get the benefit anyways. But yeah, just know that we do have a guy in our arsenal there that becomes a big thing. And by the way, I just said this to somebody yesterday. You could pull out a bunch in 2021, but since 2022 is just around the corner, and depending on whether or not they'll actually withhold the money, if they don't withhold money, if they don't request that they have to withhold at least 10 or 20% for taxes, but you can take it all and invest it. I told this same person, I said, listen, pull it out after January 1st. Your tax bill is not going to be due till April 2023. Even if that money sat there and she has a whole life policy, so even if you put it into the whole life policy, earned a tax-free dividend on it, and then turn around and borrowed from that policy, then paid the tax bill later next year, at least you're making some money off of it, right? Or for some of you guys, you could do something with short-term lending. You could do something where you're lending your money out for 12 months or less and trying to make a return on it in the meantime. Doing basically the same thing the government does to you when they take your tax money early and then give you a tax return next year and you feel all good about it. But the truth is you realize you just overpaid your taxes if you get a tax return. So that's one thing too, is if you're looking at pulling out your 401k or IRA money, often just waiting a couple weeks until you hit January is a great way to do it. Unless of course they change the tax laws on us.
Also a good time to get your cost segregation studies in. Anyone who needs to do some depreciation on investment properties bought last year, those guys are going to get slammed typically mid-Jan to mid-Feb. So now is a good time to get those requests in.
It's a great idea. Yeah, you just get that all ready and done. So when January comes around, you just send it to your CPA. Yeah.
Yep.
So what does that mean to get your request in? Who do we talk to?
I'll send you the contact info, Darren.
Okay, that'd be awesome.
Yeah.
Yeah, so they got a cost segregation specialist there over at RP. So, but yeah, that's a great point. Glad you brought that up, Greg.
Hey, Chris, I got a question.
Yeah.
Of the various strategies that you have, that you mention either on the podcast or just even now, there's one thing to know about them. There's another thing to have done them.
Mhm.
Have you tried all of these strategies?
All of them? No, definitely not. I mean, I've tried most of them. I would say I've tried a lot of these strategies, but just so you know, the podcast, even though I have guests on there, doesn't mean I invest with them. It doesn't mean I recommend them at all. That's an important thing to know. And also know too, I mean, I know, some of these guys on the call can attest, some of our best deals, I never put them on the podcast because we don't want competition. We want the best deals from some of those people. So every once in a while they say, hey, should I come on your podcast? And I say, no, because you don't have enough deal. You couldn't handle the podcast anyway. So no, I mean, we don't invest in every single thing. That would be madness. You want to invest in the thing that aligns with what you're doing. But I mean, definitely a lot of strategies that we do talk about, whether it's investing in apartments and syndications or, self-storage or, like we were talking about oil, or mineral rights earlier, right? Or talking about like turnkey, real estate investing and things like that. And I've even done some active investing that didn't work so well, especially in the last recession. I'm a horrible property manager. I'm not good at holding boundaries that way. So, I mean, I've done a lot of these different things, but definitely by no means have I done all these investments that you'll hear on these podcasts. Did that answer your question, Howard? Or?
Yes, it did. other question, if no one else has got one, is when you're working with someone one-on-one, what's your ultimate goal from a cash flow perspective? Whatever they say is try and get 1.5 or 2x, whatever they want, just for the greater freedom? Or how do you, where do you kind of set the boundary?
Well, I wouldn't say there's a boundary per se, but what we're really focusing on, and I know we can open this up for other people that are working with us already, whether it's Craig or myself. Our goal is really just to increase that passive income as much as we can over the course of the next several years, right? That's the goal. So if someone has a goal of 10,000 a month, great. How can we get there as quickly and safely as we can, right? It's just about getting there.
Jesus Christ.
So some people, no, I'm not him, but so anyways, but yeah, that's the big focus, is really this: how do we get the best results as fast as we can, but doing it in a safe, more predictable way. And so some of you guys, some can do it within a year or two. Others might take 5 to 10 years to get to that point.
I don't think it's, I definitely don't think it's a one size fits all either. I think, you may have one goal in your mind, and then, once you start looking through different investment strategies, there's some really cool growth plays out there as well. That maybe could enhance your cash flow down the road. If you put some assets into, growth funds as opposed to putting it all into cash flow funds. So I think really just kind of doing some, individualized scenario analysis around your particular situation is kind of is the best bet. But so many options out there now in the alternative space.
Yeah, good point. I've got a client right now that he's like, I'm enjoying working. Let's just do growth. He's like, I don't know, we'll do a little bit of cash flow, but hey, let's do more on the syndication side where there's gonna be a bigger payout 3 to 5, 6, 7 years down the road. And so he took more of that path versus just going for immediate cash flow. So it is personalized. It is case by case.
How often do you suggest we meet with you? I mean, like, you meet with you once, we have a different idea, and then maybe your focus changes. You want to be on a different path. How often do you think, we should meet with the people who meet with you one-on-one? Do they meet every month? Do they meet,
Well, specifically,
what's the right amount to get the best bang for your buck?
Yeah. Well, and you're already past that stage where we did the initial meetings, right? To kind of get that initial plan set. So now you're in that lifetime support, kind of that retainer period. It's basically kind of the times you mentioned, if there's any kind of big transition that happens in life or a different focus, you say, hey, I kind of need some extra guidance here. It's as often as you want to use it. Now I have, I wouldn't say do it monthly, because that's the case. We'll have to renegotiate a different thing. Right. And it may get kind of boring, because when I have had people do that monthly, it's like, all right, this is kind of the same conversation we had just a month ago, but
Yeah, I guess.
But that's why we try to keep you, up to speed. That's why we keep on the email list. So when new deals come out, hey, here's a new opportunity. And of course you can always email at any time and just say, hey, what do you think about this for my goals? This is my goal right now. What do you think? Again, we never say, yes, do it. Right. We never give that, we can never legally give that advice, but we can always say, all right, well, based on your goals, that matches, right? Like that would work. Don't see a reason not to do it. Or, hey, if you do this, just be aware this, here's some of the risks, right? Here's some of the cons. But yeah, like Tanya, in your kind of case, where things might shift and change, or all of a sudden you have a bunch of money to deploy and you say, oh, all right, I got some money. I'm not sure where to go with it. Great conversation, because, what we might talk about, even a year prior, we might have a different focus saying, hey, this was good then, but here's a better opportunity now for you.
Okay. Thank you.
You bet. Any other questions for me, Craig, or even for different members of the group?
How are things working out with the land opportunity that
Really well.
you had discussed a while back? What's happening there?
Yeah, that's one of those we'll never put on the podcast, right? Now the waiting list is way over a year. For me personally, I mean, I'm in it, and there might be one or two others on this call that might be in it too. I know there's a few clients already in it now, but I know for me, they've already got some great results in the first few months. I haven't got the update in the last month, but I know from just the first 2 months, I had roughly, if they just stopped investing and just let it pay itself out through the course of 12 months, it would hit over a 70% return. So I'm pleased. That's, I mean, I was hoping for more, closer to about at least a 50 or 60% return each year on that money. And it's so far doing better.
Is that, I forget, is that an income play or is that a return at the end of the period? How?
You could do either, but it's more of a growth play. It's definitely not something that would give you regular stable cash flow because they're constantly moving the money around. But if you need to get money out, you just kind of let them know, hey, when this, either when they sell the property and the money comes back in or whatever it is, because the money's moving in and out all the time. You just have to let them know. So then you can say, don't reinvest that money. I want that. Right.
Okay. So you're actually reinvesting.
Mm-hmm.
They're reinvesting for you over the period of time.
Exactly. Yeah. They're reinvesting it and reusing it, whether they're doing seller financing or flipping or whatever they're doing with that money.
And what are the tax implications on that?
Normal tax implications. So, whatever gains you do make, especially when the deal is done, then whatever gains or returns you get, that is taxable, just ordinary tax, just like you would if you were doing short-term lending.
Okay, so it's regular income tax stuff. There's
no depreciation.
Even though there's not depreciation on it or anything. You can't depreciate land. Okay.
Exactly. Yep.
I mean, so even though they've had it for a couple of years, it's not a capital gains type of thing. Is that correct?
Correct. Yep. I could be wrong. I mean, there might be a way they can classify it as that, but from my understanding, it's just ordinary income from the deals that they're doing currently.
Anybody doing that with qualified funds, or is it mostly with non-qualified funds, or is it not something that a custodian would accept?
You can do it with qualified funds. They'll accept it as long as the custodian's okay with it. Yeah.
Okay.
And in fact, I've told a few people that might be a great way, especially if you don't need the money, within 3 years, right? Because it's a 3-year contract you have, but you can let it keep going beyond the 3 years if you want. But it's at least a minimum of 3 years.
Although you actually lose, your initial investment, you don't get a return on that. Am I correct?
On the initial investment, you're still getting returns. What do you mean by that?
Well, don't you have to pay them X number of dollars? So that would be a big hit to come out of your retirement monies.
Correct. Yeah. So there's that 100,000 fee to get into it, but then of course they're reinvesting that, whatever it is, like 50 grand all the way up to, they can take up to 200 grand of money that they'll actually invest. So yeah. So initially it's like a hit. So like with my money, like I had $100,000 fee I paid them plus 100,000 they're investing. They now got the 100,000 to at least 170 currently. So they've almost got it back up to pay off the fee within a matter of months.
Oh, so you're almost back to paying it off and you're not even a year into it.
Correct. Yeah. Yeah. They're not trying to overpromise anything. I mean, I know that they're trying to see if they could try to double the money within the first year, but again, I never like to keep my hopes up for anything. I always keep my hopes down a little bit just so I don't get overly excited. Right. But, again, if they perform, great. And that can change year to year, right? Right now, they've had great opportunities and some really good, just really good deals happen. So
it's working out, in other words.
Yeah, definitely been great. So far I've been pleased. No guarantees, of course, right? But it's been good.
They're definitely the market leaders in that space for sure. They have the expertise, definitely.
Yeah, they've done very well. All right. Other questions, or comments, things that are on your mind?
No question. It's sort of more of a general keeping track of everything question. How do you keep track of everything? I've got, a couple of rental places now. And I mean, I have a system, but I feel like I just am not keeping track of like the money flow and it's hard.
You're not using your
track of
cash flow
everything.
optimizer anymore, Tanya?
No, I guess I'm not.
We're
Is that what I'm
actually,
supposed to be using?
We got the
That's your
new
good
version. That's pretty
benchmark.
good.
Yeah. We're actually going to be launching some software though in the first quarter of 2022. It's going to be awesome. You're going to be able to automate all of your income, your expenses. It's going to link to your bank accounts. We'll definitely do a demo on that when it's ready to go. Hopefully either in our January or February mastermind. So I think your problems may be solved.
Thing I'm also excited about, it's going to project, how far out it takes for you to hit your cash flow goal. So that's been something that I have yet to find any calculator out there to be able to do. And so that's the big thing that takes the most time, that and linking up to, make sure you can link to accounts just like QuickBooks does, things like that. But yeah, we've got that in the works. Pretty exciting about that.
What's the price point for that?
We're still determining that at this point.
Okay.
They want to charge us $250 a month to do it. We're trying to see if we can get the price down so we can have that be something more accessible to more, make it more easy.
Is that
So
what was talked about a couple of months ago?
I'm sorry.
Is that what we talked about a couple of months ago?
Mm-hmm.
Still the same fellow?
Yep. Still.
Yep.
Good old Paul White. Yeah.
I wasn't mentioning names because we were told not to mention names.
Oh, he's fine. He's trying to get that thing working. So it'll be a while. But his son's pretty brilliant. He works for Microsoft, so it's kind of cool to see that at least he can take our vision and make it into reality. But yeah, we're definitely going to dumb it down a little bit too. So dumb it down, and hopefully we can dumb down the price a little bit more as well. But I want to open up that question though, what Tanya asked to the rest of you, because I know what I've learned, of course, with tracking is that everybody has their own method, their own preference. What are ways that you guys like to track your investments? I mean, are you using the cash flow optimizer? Are you using a rudimentary spreadsheet, or do you use a program? What are you guys using?
I just use a rudimentary spreadsheet because I have the same frustrations. You and I've talked about that, right?
Yeah.
So I didn't see anything out there in the market, and I knew you were working on the software, but I wasn't sure that was going to support, what I needed to do, because I wanted it like right now. And also I wanted to be able to keep in mind in my position where if I were to kick the bucket tomorrow, my wife needs to be able to look at the spreadsheet and have make sense out of it. Like, here's where the people to talk to, here's the websites, this is what the money going in, this is the money that should be coming out, blah, 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 just with details and then numbers down below it. So I haven't really finished it that much, but I have a spreadsheet page for every investment that I've got that I've been keeping track of stuff. And I think that helps a lot. It just helps us to be able to focus what we're doing.
Yeah.
So it is pretty simple stuff. It's nothing complex.
Yeah. Beyond just tracking the numbers, it's really important to keep that contact information and even just the terms. I know, like, Joe and I mean, when Joe had to show me his spreadsheet with his, 40,000 investments, it was helpful to be able to say, okay, here's the not the deadline. What am I thinking of? The payout proposed, is it proposed? Whatever it is, the expected payout date of it, right? So you can see like when money's coming back in, you have to redeploy it. You have to do some planning. You can even, if you obviously do it with Excel, you can even like reorganize it by the date so that you can always just do it saying, all right, here's one coming from March 2022. That's up at top. Here's one for May of 2022. Here's another one for September. And you kind of keep in that order. So you can say, all right, here's $100,000 coming back from that deal. What's my next move with this money when it comes back? Right. So, yeah, you can definitely use it in a lot of different ways. Craig, how about you? How do you organize it?
Gosh, I am Mr. Excel. And the problem is like all my spreadsheets are linked. And if I have one fat finger error, it could just screw up everything. But especially as you're starting to accumulate more property on the real estate side, it's really important to have a year-to-date P&L of how your property's doing. You want to have all your expenses listed out. You want to have your income. You want to have repairs. And that's important because when you go to buy your next property, more often than not, the lender is going to ask for all that information. So to have something really buttoned up is very much recommended. And, I was speaking to a lender yesterday. He was saying, after you have 4 or 5 properties, they would recommend even going into QuickBooks to do your accounting.
Yeah.
But yeah, Excel is great, I think, but once your business really starts to expand, it can be challenging to keep track of everything.
Yep, definitely can.
Chris, I have a question for people who are just in the Wealth Accelerator Academy. So, we go through all these lessons and it tells us kind of how to do our first deals, how to get involved with alternative investing. But like for real estate, where do you recommend you look for like your first property?
Most time people look in their backyard and that may not be the right place, right?
Exactly.
It depends on what you want to do. Do you want to be the question you have to ask yourself is, do you want to be an active real estate investor where you're getting really involved into it, right? Or do you want to be more of a passive investor? And there's no right or wrong answer with that. But there's different forms, right? Some people just want to be hands-on. They want to just be in it and they want to, bump their knees and scrape their forehead or whatever it is to try to learn to do it that way. And I've learned that way too. And I don't recommend it, but for some people, that's the best way they learn, right? And so they have to get the experience and have to understand it. And then they can decide whether they want to be more passive or active. For me, by skinning my knee a little bit, I definitely learned I would want to be a passive investor. So answer that question first is, do I really want to be more active where I'm looking for the property and trying to, negotiate and deal with all that stuff and have to renovate potentially, or, make it rent ready, and even then, if you don't want to be rent ready, or you just person that's renovating it to flip it, right? And then having to deal with that. If you don't want to go that route, then look at the passive side. And that's where, the easiest one, if you're going to go the passive way, and especially this is the one I would say is like real estate with training wheels, is look at turnkey investments, right? And there's a lot of turnkey companies out there. Obviously, we work with like 6 or 7 of them ourselves. But I mean, you can definitely find a reputable turnkey company. Now, if you're at the point where, you're like, okay, we got a lot of cash. I'm going to try to, how many properties can I buy? Well, you should probably be talking to us, and looking to get that one-on-one guidance to see what might be best. Because every turnkey company, they might be in a certain location, and that location might be good one year, but then the next year you go back, it may not be as good, right? And so I think it's good to get a lot of different turnkey companies in your, what would you say? Like you would be on their list, right? I was going to say my repertoire, but it's more like getting them in that list, right? Like having that list, that resource to say, you know what, I feel like I want to go this way. Like with my wife and I, we wanted to look more towards Missouri, and then all of a sudden there's Independence, Missouri. We're like, whoo, all right, let's go there, and we went there for that. And, we wanted to get at least a few Missouri properties. We were looking kind of zoning in on that area. Other times, we wondered about Florida. Okay, great. Do we have a good provider there in Florida, which, we'll have a contact there. Do we want to look at Texas, for example, or whatever? So I would just say if you're in the Western half of the United States, not likely are you going to find great deals on the real estate side. So if you are in the Western half, I would suggest looking east, more like Oklahoma eastward, look out that direction. Not Manhattan, not so much.
I'd say when you're also, doing your due diligence initially, the most important thing when it comes to real estate is the numbers. You want to be cash flow positive. You want that spread to be as large as possible. And I have a pretty detailed video in terms of what you want to look through when you're thinking of market price, how to think through mortgage payments, rental range, all your expenses. And you want to make sure you have a really nice cash return cushion that you can hopefully pocket every month. You'll have some expenses, with leaky faucets and whatnot, but definitely the numbers should be the first step in anyone's due diligence.
That's a great point.
Awesome.
And actually, that video is in Wealth Accelerator Academy, isn't it?
It is.
Yep.
Okay, so many of you in this already have access to that video, which kind of comes in the next point. I know some of you guys are from the light version, right? That are joining us today, because I noticed there's a few new names I don't know. Danielle, just out of curiosity, I don't know if this has been announced yet or not, but we'll announce it here. For those in the light, we're actually opening up a few key videos, one about investing, as well as like the cash flow index and a few other key videos that will give you some good strategic things to work on. So it's not just, hey, we got a nice introduction. All right. That doesn't tell us much about what's in there. So there's a lot of great content in there, of course. And we, obviously it's, that's where you join the Wealth Accelerator Academy if you want to get the full access, but we're going to give you access to some really cool, some good stuff that you can actually take action on.
Yeah, I'll be putting those in tonight. So you will have
Awesome.
access to those. A few more videos, just a little bit more content so you can see what the full course whole range is.
Yeah. So Merry Christmas or Happy Hanukkah. Well, we missed Hanukkah, but you know what it is. Happy holidays. So, all right. We got time maybe for one last question. Is there any last question from anybody on the call here? Whether it's for us or for anybody in this room right now. All right. This is exciting. I'm screening through to seeing who's still here with me. I know we got Diana here, but she's got a bright smiley face on today. So I like it. Howard, I know you had a bunch of questions. Do you have any questions for any of the members of this group based on their experience? Or did we check off the list?
No, I mean, there's going to be more than just this one call, so we'll give it time to mature.
Let it germinate a little bit.
Yeah.
That sounds good. All right, guys. Well, great. I appreciate you guys being on. Again, this is the last, the first and the last of 2021, but we will be back next month doing the same thing. So for those of you that are, of course, in the one-on-one, we'll be going back to should be going back to our normal scheduled calls as well on our third Tuesdays of each month. And then for those in the Wealth Accelerator Academy, we'll let you know which Wednesday it's going to be. And then we're going to try to keep it on track, whether it's the second or third Wednesday. We're still deciding on that. So we'll let you know. And again, everybody, appreciate your participation. Great questions, great stuff. For those in the Wealth Accelerator Academy, and well, really everybody even has access to the Wealth Accelerator Academy. If you're in here, we're going to be taking these videos and posting this on here so you can review the question and answers that we already had. So everybody, make it a great day. Have a happy holidays, and we'll see you later.
Thanks, Chris.
You too. Happy holidays.
Happy holidays.
See you guys.
Happy holidays, guys.
Happy
Thanks.
holidays, everyone.
Holidays.
Hi, Deb.